What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. This is the show where we use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. As you all know, we had some bad news that took place last night. My heart goes out to all the civilians there in Ukraine that have to put up with this. There are a couple movies that quick clips that I want to show you just to give you an idea of just how, scared a lot of these civilians are and what they're going through at this particular point in time.
Я не бачу. Ой, Боже.
Не снимай, носи.
To be quite honest, I didn't want to put together a video today, so I'm doing today's video. I'm trying to keep it a little bit shorter and just going over some thoughts throughout the trading session because it is a good learning experience. Still, tomorrow I'll be back on my game. I'll put together a weekly recap for everybody. Let's just go ahead and hop into today's episode. All right, everybody, welcome back. We're looking at the 11 sectors that make up the S&P 500. So as you all know, the market started off very, very bearish. Big hit to the downside based off the Russian invasion that took place. Now, one thing that I noticed was there was a lot of bearish sentiment piling up in the markets as soon as that news came, and rightfully so. There was a lot of fear. And I kind of want to walk you through my thought process because the market ended up green on the day. And that was coming off of a huge move to the downside. So I'm going to share some stuff that I posted out on the Discord earlier and kind of walk you through my thoughts. So the very first post of the day was this one. And basically, I was just saying that I was going to take it lightly for the most part today. But the overnight session, it cracked an important level, that 4,200. We talked about that in the prior episode, being that was a very important level. And when it gets down to around that area, what is likely to see take place is the VIX firing off and seeing a big bout of volatility. If you didn't watch yesterday's video, it's pretty insightful still at this point because we did some volume kind of analysis as well. Well, the VIX fired off, but what was very interesting early on in the trading session, despite this fear, the VIX, it didn't even beat it over its January high, and that right there was a telling sign. So if you were looking for a capitulation move, that was a sign right there that something was a little skew. Now, another thing that I noticed was that is likely to get a back test the 4,200. That was just kind of an assumption right there. But the reason why I thought that was there's big stocks like Google. It was only down 0.5%. Microsoft, it was only down 0.8% as of then. Now, another thing was the housing market was already going from deep in the red to green in the very early trading session. And I've been showing you the correlation between the housing index and the S&P 500, which I'll show here soon. The dollar, though, it did start breaking out of that coiling pattern, which we previously discussed, but it didn't fire off completely. It was a pretty strong move, but it backed off. And then also there was some safety kind of flying into gold as well as bonds, but really out of the gate, they came up and then they started selling off, which was another sign as well. So if we continue on, this was the chart that I posted. You could hardly see it right there. That was when it was posted. This is just looking at the E-mini futures. And these were some levels that I was paying attention to. And as you know, we ended the day higher, retesting that 4,200, actually reclaiming it. But here's the housing index. And, this isn't from earlier on. This was from, the end of day. But one thing that, to call out here is this day, it was going to green very, very early on in the trading session. And I want to call out that we talked about this, double top here while the S&P 500 was making another high, and that right there was diverging. Then the market started selling off. Another divergence was right here early on where it was putting in a lower high, but the S&P 500 had a matching high, and that was a diversion. And then we started using it as this area of support right here, saying that if the housing index were to break down, that could be a leading indicator that the S&P 500 could follow. And sure enough, this broke down, and shortly thereafter, the S&P 500 cracked down too. Now, what I want to call out from a a bullish perspective is obviously this big range candle, which we'll get into here momentarily on the indices. But I want to just point out also that it actually hasn't reclaimed this breakdown area, although the S&P 500 has. So this is a bullish type development that took place overall in the markets, but it still needs some additional time to prove itself before getting overly excited about this specific move. Now, a couple of things that did take place. We talked about, Microsoft and Google, some big dogs. They were down only slightly despite all of the panic that was taking place in the financial markets. And they ended the day in a very, very big bullish engulfing, kind of retesting this bottom with some volume to support the move. So this right here is a very, very big day. It could signal that this is a low for quite some time. I'd be very shocked to see this low getting taken out in a very short order. So what we need to pay attention to moving forward is to see, what the next 4 to 7 days looks like, and seeing if we get some continued volume and movement to the upside. Let's go ahead and look really quick at Google. Very same situation right here, matching that bottom, and then just seeing an explosive move out of that, doing a bit bullish engulfing candle as well. One thing that was interesting that was posted on my Discord was this photo right here. Black Diamond posted it, and I wanted to point out, just zoom into the photo, that surprisingly, when there are invasions, leading up to the invasions, we've seen some strong volatility, but during the invasion, the date of the invasion, it actually signaled somewhat of triggers to buy, where the market actually rallied higher from those levels, and we saw something very similar take place today. And they reminded me of this book I posted out in the Discord as well. It's from Walter Deemer, and it's called When the Time Comes to Buy, You Won't Want to. And today definitely was a time where you wouldn't really want to step into that, but there was clear signs showing that there could very well be a back test. It doesn't mean there's going to be a bottom or a full recovery, but there was definitely signs of capitulation taking place where we could see a move higher. And that's kind of why I'm walking you through these thoughts. Now, if you haven't read this book, it's a great book. It's a short book. It's just built up of, a bunch of quotes. It's not like a regular book, teaching you something. It's just to kind of open your mind and get you thinking a little bit. Now, what's really cool here is, surprisingly, Walter Deemer is actually going to be live with Michael Gayad tomorrow in his Twitter Spaces. So if you want to check that out, make sure to go to Michael Gayad's page on Twitter, and he has this pinned right here where Walter Deemer is going to be coming to talk the markets with him. So that should be really cool to see. A little bit later in the day, we posted this. So XLF. So what you probably noticed early on was the big tech was playing out quite well. But one thing that caught my eye was the financials were really holding down, suppressing the S&P 500. So what I wrote here was, and you might remember this chart because I showed it on previous briefs. But the reason why I showed it was because XLF, the financials, was the worst performing sector early on. So let me zoom into this photo here. Let me get this next photo. There we go. So this is what it looked like when I posted that. But you can see it actually tagged a previous area of support right here, and it was also previously resistance, as it's been in this range. And we talked about it when it reached up to this, meaning that it could be a potential good short opportunity, and it came all the way back down to the middle of the channel. So, it seemed to me that if financials started to pick up from here, that is what we needed to see in order for the S&P 500 to go green. And sure enough, the financial sector wasn't the top performing sector by any means, but as you can see, we finished the day not filling the gap or getting above it, but making a significant move off the bottom right here with some significant volume as well. And as you can see, we had big volume on this test, and we had big volume on this test, meaning that this is a very significant level right here for financials. So if it starts breaking eventually in the near future, be very mindful of that there could be some trap supply up in this area. Now, these moves caused a lot of confusion, right? There's some wild price action, and we're going to get into that. Most importantly is the type of candles that formed and how they formed, because they are very bullish. You just need confirmation that there's going to be follow through. So this was a great illustration that somebody in the Discord posted. There's a bearish candle right to the downside, and this is a bullish piercing pattern. And what took place was the bullish candle, when it gets above and closes above the 50% line, that is a very, very bullish, impactful sign, especially when there's volume. Now, what you'll notice here is it's a gap down, right? And then it closed 50% into it. So in bull markets, what you like to see are the gap downs and then the moves higher. Whereas in bear markets, you typically get a gap up and then you get get that rip down lower, which is, somewhat of a trap for most people. So we don't know, right, if there's going to be follow through at all at this particular point in time, but it is a good sign. And we'll hop into the indices now and walk you through that. So first and foremost, we did have that lower high and lower low take place in the S&P 500. So that is still not necessarily bullish overall, but the candle, if you can see, it basically rallied straight up. So I'm going to go into the 15-minute chart momentarily and show you that it's a little like, it looks like it has to take a breather, okay? And for fun, I like to predict, the lows and highs. I like doing that, right? It's not buy or sell recommendation, right? Somebody on my thing gave me a hard time for making a prediction. But, I want to give you an idea of kind of where my thoughts are based off of what I've seen. And given this candle, I do not think that we're going to have a lower low tomorrow. I'd be very shocked with that type of data if that were to happen. So my bet is on a higher low tomorrow. I don't even know if it's going to go down that low, but I'm thinking a higher low tomorrow. And I think it's possible to have a higher high as well versus this previous candle. It's either that or it's going to be an inside trading candle. My bet is going to be a higher high, higher low for the time being. And you can see here we closed into the risk range back inside of it, fairly unchanged for the most part for this trading week. We're down slightly. We talked about the volume pattern yesterday, and I wanted to point out that we did get a big bout of volume right here on a pretty significant day in the markets, up 1.5%, but it's rallying from a significant lower point. So like I said, the next 4, 5, 6, 7 trading sessions are going to be very important to see if we can hold this low and start to see some more volume also start coming in, bigger volume than what we saw on these declines right here moving forward. Okay, now if we take a look at the 15-minute time frame, I just want to call out we're still below that 5-day declining moving average. Okay, so we could very well get stalled out. That's very, very possible. The PMO is very bullish right now. It's not above zero, but it is pointing straight up. RSI is moving into that overbought territory, and we're moving into that declining 5-day moving average back within the risk range. So I do think that it's possible that we'll just close within the risk range. Understand there's still a lot of risk in the system, a lot of volatility. So you got to be careful going into Friday, which then, if you don't want to do any damage to an account, make sure you take it lightly on a Friday so you can enjoy your weekend. Let's hop into the Qs really quick now. The Qs also had a lower high, lower low today, very big move down to the downside, and then basically is right back in the middle of the range, which is unchanged for the week for the most part. You have that positive divergence on the RSI and big volume that came in today as well. Not surprised, right? A big volume on this type of candle makes sense. And you can see this is a very, very bullish candle on big volume. So right here, I just don't see the market putting in a lower low tomorrow. That would be absolutely crazy to see that take place tomorrow. So I'm going for a higher low, and I'm thinking, I feel like it could be an inside trading candle, but given this context, I haven't even looked at the futures market yet. I'm going to say a higher high and a higher low tomorrow as far as my prediction goes. But I feel like the market's going to have to take a little bit of a breather. So I'd be very, just hopping in long right here without seeing it digest or do anything is a little risky, personally, in my opinion. And the reason why I say that can be seen more on the 15-minute time frame. This move, right? It was bam. It was pretty much completely vertical. It flagged intraday, right? I actually didn't even share. That was something else that I posted actually early on in the Discord, that there was this flag taking place early on that looked pretty bullish. But you can see here we ran right into that 5-day moving average. RSI is getting a little frothy. PMO's curling straight up right above the zero marker. So to see some sort of digestion tomorrow would make sense to me. Just understand that it's probably going to be a volatile trading session once again. Now, as we're coming to an end here on today's video, I did want to point out, somebody else posted this from Sentiment Trader. It said in the 40 years since inception of the S&P 500 futures, there have been only 3 sessions when they opened up more than 2%, fell to a 6-month low, then rallied to close up by more than 1%. And he labeled out those dates being one today, and then these 2 dates here in September of 2008 and July of 2002. And I wanted to pull those charts up to show you what it looked like shortly thereafter. So let's look at 2008 first. This is right here in the 2008 where we saw that huge move up and then bam to the downside. This was during, the financial crisis that was taking place, but that big rally came, right before a massive sell-off. So like, the reason why I'm pointing this out is, just don't throw caution to the wind, right? However, here on 2002, when that happened, we did see a pretty strong rally out of the gates. Boom, it went higher. And understand this is coming off of the, basically bottoming out here off the dot-com bust. And you can see that we came all the way back down to retest those lows. So, we could very well have some follow through. This is just interesting data that's being shared. But it's nothing that you have to make any decisions based off of, in my personal opinion, right? As it stands right now, and as we go into Friday, we have some very bullish developments taking place in the U.S. markets. So let's see how it plays out coming into tomorrow. And when it comes Friday, by the way, I will have the weekly recap episode to kind of go over a couple more things in more detail. That's all I got for you, everybody, on today's video. I hope that helped out at somewhat. I will see you back here tomorrow.